Welcome to Bears in Exile. Today is May 25th, and we're going to be looking at the Dow, SPX, VIX, TNA, UUP, FXE, SLV, and GLD. And sorry for the video being so late. I tried getting this working earlier, and it kept crashing every time I would do a conversion of the video. So that should be fixed now, and I guess that's one of the pluses of being a network engineer, is that I can actually fix these things. So anyways, here we are with the Dow. You'll notice that we are still in the channel. We did get a sideways to uptick as we were looking for. The one thing I don't like about this is it gave us this ugly, stinking, spinning top. And you know, that's not, it shouldn't be just a cause for worry. I mean, this is an indecision candle, but I just hate spinning tops. They are not nice to me a lot of the time. So anyways, a little bit of superstition there, but I hate spinning tops. Beyond that, the secondaries are pointed down, pointed up, room to move. So you know, this is a mixed bag, and just like this indecision candle can go either way. Any way, any day. But anyways, for better information, we're looking at the SPX, just like the Dow. We're still in the channel. We still have that target of 1305. Now, in the aftermarket last night, there was all kinds of mess overseas, and the futures actually did hit 1305. So the question becomes, you know, have we touched 1305? That's a good question, and I don't exactly have an answer for that. My gut reaction would be no, but we're going to have to see. And had they not fixed the futures before the market opened in the U.S., we would have hit 1305 today. So, stinking spinning top. We do have further extension of the short-term moving averages. Notice we do not have an uptick yet. So, no sign yet that this needs to go up and correct. Certainly it could, but more damage is being done to long-term moving averages, and everything else is pointed down except for the RSI. Now here's something interesting. The VIX's candle does not match the Dow and the SPX. You know, this is a continuation candle. It's not a spinning top like the other ones. We are doing further damage to the bar. It looks like we're going into a double flat line, and everything is pointed up except for the RSI. Now, here's the interesting part. Here's the tell. TNA, we got an uptick. Uptick gives us a price target. The price target is $83. Almost everything is still pointed down except for the RSI, but we do have this uptick to deal with. So within 3 to 4 bars, that should be completed. Now, since the TNA moves you know, faster than the Dow and the SPX, you know, a slight move up will hit that price target, and I am expecting that. And so it could even be taken out with an intraday move. You'll notice that with the range that we have today, if we had a even lesser range than today on the positive side, it will hit that target and take it out, and this bubble will be fixed. And then it'll be up to it to decide if it wants to go up or if it wants to go down. And that does correlate well with the spinning tops on the Dow and the SPX, and it correlates well with the continuation candle of the VIX. So, with that in mind, we should expect something of an uptick, either intraday or an uptick by itself over the next couple of days to fulfill this. Now, UUP, this is not a hammer. The tail is not larger than the body. still doing damage to the long-term moving averages. The short-term moving averages are leveling out. Had they not fixed the stuff in the pre-market, we would have been butting up against the upper Bollinger Band. So this is interesting. You see that it is also echoed in the FXE, the euro. This is not an inverse hammer. The wick is too short, and all of the moving averages are still pointing down. Very interesting, and that is, you know, almost a perfect reflection of UUP. You can see on UUP, except for the fastest moving average, they are all still pointed up as well, and the slowest long-term moving average. So very, very interesting, and so it wouldn't appear that the downtrend for the euro is done, or that the upward trend for UUP is over. Of course, a news-driven event can change all of that tomorrow, but for the moment, it looks okay. SLV had a couple of very, very strong days, gapping. We do have some crossover on the short-term moving averages, and we're going into a further flat line of the long-term moving averages. Very nice. Won't give too much resistance if it decides to break through. If we do have full crossover prior to entering the bar, it's going to go through it like butter. As you can see on the secondaries, we have all kinds of room to move on the upside. SLV looks fantastic. And its brother gold, GLD, is not quite so good. I mean, it has had a couple of nice days. You know, we do have this inverse hammer signaling that we could have a slight move down. In the past few videos, we have talked about needing a complete separation of the short-term moving averages to signal a guppy entry. This angle is not the greatest. We do finally have a kind of a messy full separation. So it is debatable whether or not this could be a textbook guppy entry. I would personally like to see just a little more expansion on the moving averages, but they are not touching one another, all of them. So, you know, that's good. Secondaries, you can see that we are about to have a crossover of the MACD, but the RSI and the stochastic are already above their 70 and their 80s. Now they can stay up here, that's not a problem, but we do have the upper Bollinger Band right here as resistance. So is it going to have enough strength just to push it up? Yeah, it could, but the odds are more likely that it will do more of this, slower upwards movement that we're having here as it bumps up against it, and that would go well with the stochastic and the RSI. But that's my feelings of that, and if we get further good separation, definitely that will be a fantastic sign as well. And there you have it. Gold looks good, but not nearly as good as SLV. And of course the currency is still in flux, but still in the direction that we are, oops, wrong one, that we've been talking about. And the Dow and the SPX, nothing to worry about. We did expect the movement that they have had, and now we just need to see it continue on its way and hit that target at 1305. And once that's done, I really do think that it has a fantastic opportunity to bounce up and then start working on that inverse head and shoulders that we have been watching. But the really big question is, does that pre-market 1305 count? And I can't really answer that. If it just decides to shoot up from here, which is what a lot of people are thinking that it's going to do, that's okay too. So we need more data, need a few more bars, and there you have it. There is the market overview for the 25th. As always, all investing decisions are your own. This chart and video are for educational, entertainment, and consumption of time purposes only. Thank you very much.